The Bank of Uganda Monetary Policy Committee has reduced the central bank rate by 25 basis points from 10% to 9.75% due to an improved inflation outlook.
Inflation remains subdued, in part reflecting the unwinding of the global shocks, the stable shilling exchange rate, partly due to the steady coffee export receipts, moderate import growth, and prudent monetary policy that balance economic growth recovery while maintaining price stability. Over the 12 months to the month of September 2024, annual headline and core inflation averaged 3.2%.
So the adjustment downwards to 9.75 means that upper band will be 11.75. So the interbank rates already would adjust towards that upper band, say, to the maximum. Although the mid rate is 9.75, but we have to the maximum, it has to go to 11.75.
Over the 12 months to the month of September 2024, annual headline and core inflation average was 3.2%. Notably, inflation declined in September 2024, driven by lower oil prices and reduced fuel prices.
The decline in core inflation was primarily attributed to a reduction in the services inflation, particularly in passenger transport services. The Bank of Uganda projects average core inflation to remain below the medium-term target of 5% over the next 12 months, supported by the relatively stable shilling exchange rate and the favorable food and oil prices.
However, the inflation outlook is prone to risks, says the Deputy Governor, Ating'I.
On the downside, inflation may be lower if the previous policy actions dampen demand more than expected, the economic environment in the rest of the world worsens unexpectedly, favorable harvests that results in lower food crop inflation than currently projected, and a stronger appreciation of the shilling, partly due to stronger capital inflows, coupled with softer global inflation.
The MPC assesses that inflation will remain below the target in the near term and that the risk to inflation is balanced, but acknowledges the inherent uncertainty in the outlook, which warrants a cautious monetary policy stand. Maureen Babidie for UBC News.